Thanks, Shima, for the introduction. I think today we have just a very short sharing about the latest budget 2024. So in my this around 1 hour sharing, I will more on focusing on the tax highlight. I believe this year some of the tax initiative or maybe some of the so-called new policy many people are very concerned about. I think the top one should be the capital gain tax. And talking about if you dispose of unlisted company share in the next year, I think you subject to 10% capital gain tax. Later we'll share more about the in-depth information about this. Another one, I think many people also very concerned about, maybe you heard about e-invoicing. So e-invoicing is also another concern of many businesses. So later I will also share about more insight information about this. And then before I go into that, I think my section of this sharing I split into few. I think initially I will share with the individual tax first. Then after that, followed by corporate tax, tax incentive, and indirect tax and others. Okay. I think talking about this year budget, talking about individual tax, I think you all know our individual tax rate unchanged for 2024. There is no change in our individual tax rate, but there are certain tax relief has been to be reviewed, and they are adjusted either higher or they restructure a bit on the tax relief for personnel. So I think the first one is talking about the medical fee, the critical illness medical fee for ourselves, our spouse, and our child. I think this critical illness, the total tax relief is 10,000. I think in the 10,000, we have a few categories also. I think 10,000, there's 1,000 allocate for your full body checkup, and also 1,000 is for your vaccine fee, and on top of that I'll also have another 4,000 for those special child medical treatment, like those Down syndrome or autism child. I think it's about 4,000. So this one is under this category, total 10,000. I think this year 2024 there is another 1,000 inside the 10,000. He allocate maximum 1,000 is for your tender treatment care. So you have to go for those approved dentist clinic. Only you can claim this medical fee under this category. Okay. This effective from next year 2024. Another one also related to medical fee is for our parents. I think this one is total for our parents is total maximum is 8,000. So 8,000 now. This one, I think parents one is normal medical fee you can claim as long as you can approve by your this invoice. I mean the doctor bill, etc. is under your parents' name and paid by you. Then you can claim. And then in the 8,000 of this parents' medical fee, now there is a 1,000 for the medical checkup for your parents. So means that in the past you only can claim is only the medical fee. If you do medical checkup for your parents, then that one is not entitled for any personal relief under parent medical fee. So now this 1,000 allocated for 2024 started. So you can claim a maximum 1,000 in this category. Okay. Then another one is talking about learning our self-study. So self-study, we have a 7,000. I think self-study you can study even like master degree, doctorate degree in accountancy, in finance, Islamic finance, as long as approved by our Ministry of Education. You can claim under this 7,000, including those who are study part-time at CCA, etc. So now in this 7,000, there is 2,000. I think not only this year, in fact, already given, I think last 2-3 years ago, but now the incentive going to expire this year. So that's why government extend another 3 years until 2026 for those self-enhancement course fee, like upskilling fee. Those courses approved by the Ministry of Education also. So this one you can continue to claim this 2,000 maximum in this category. And then talking about our personal relief also, I think now getting more and more common those electric car. I believe many people are buying this EV, and you also install those charging device at your house. I think now if you buy this kind of a charging device, it's either you buy it or you rent it. You pay the cost. I think you can claim maximum up to 2,500. So this one supposedly expire by end of this year because of now government encourage electronic vehicle. So that's why government given another 4 years extension until 2027. Okay. So this one is for personal relief. If you buy those EV charging device installed at your house, etc. And then another one is the childcare allowance. I think childcare allowance is also exempted under employment income, provided if your employer pay you this allowance specially. So if your employer pay you this childcare allowance and you fulfill the condition will be your child must be not more than 12 years old, and you send the child is those approved childcare center, not your neighbor auntie. It's the approved childcare center. And if your employer in the payslip mentioned very clearly, besides salary, you also have another, let's say 200 per month, the childcare allowance. This 200 is tax exempt under your employment income. So now government increased this 2,400 limit to higher to 3,000 per year. Means that I think about 2,005 per month. Sorry, 250 per month for your this childcare allowance to be exempted. But this are only effective 2024. 2023 we still only limit to 2004. Okay. Then another one also related to our personal relief, our lifestyle. I think our lifestyle 2,500 included many kind of expenses from your this handphone, mobile phone, tablet, books, all this kind of category also can claim under this lifestyle. But now I think government do some restructuring about this relief. He take away those this so-called the sport equipment and the gym membership fee from this category. So next time it's no more under this category, those gym member fee and the sport equipment. So now this 2,500 is only for tablet, handphone, etc. Okay, but they insert another category is the self-skill enhancement cost, also can be claimed under this category. So maybe you just now you may be confused. Just now before that I also already mentioned there was a 2,000 given under the self-study education fee in the 7,000 category. So this one another self-skill enhancement cost means that if you finish claim the 2,000 in the just now the category, let's say you spend, let's say 3,000, that one only up to 2,000, you still have 1,000. So in the future, you can claim under this category law, but is the only also limit to another 2,500 law. So means that the 2,500 included your self-study, your self-skill enhancement cost, plus those mobile phone, books, etc. Okay, so this one will be under lifestyle category. For the sport equipment and the gym membership, there will be another new category given. Is a 1,000 under the sport and the gym membership fee is only limit to 1,000. So this is another new category under the personal tax relief, effective from YA 2024. Okay. Now we come to this corporate tax. I think the first one is talking about our computer. I think now government give us a shorter period to finish to claim our capital allowance for our computer and IT software, this kind of cost. Now going for next year onwards, 2024, the IA initial allowance will increase from 20% to 40%. And for annual allowance will still be the same 20% per year. Means that now next year onwards, your computer software within 3 years, you can finish to claim the whole cost, 100% cost within 3 years. I think currently we need to wait for 4 years because currently the rate is given. First year is 20% IA plus AA 20%. Second year until fourth year is 20% per year. So that's why you need 4 years. But now it's shorted until 3 years. So first year 40 plus 20 will be 60% now. Then second and third year will be 2020 each year. I think in the past, even faster. In the past, if you remember last time we claimed computer within 2 years. Within 2 years, there was a IA 20%, AA 40%. First year you claim 60%, then second year another 40%. That's why within 2 years you finish claim. But now government only give us a longer a bit, is within 3 years, but at least better than 4 years. Means that the business can finish claim the computer and software cost within 3 years finish for tax deduction purpose. So this one effective from 2024 for those ICT costs. Okay, other than that, I think this one also many people may ask, it's a new category of a deduction, 50,000 for those company who want to not only want to, you may have to implement this ESG compliance, ESG practice, this kind of expenses related to the ESG will be deductible, but maximum up to 50,000. I think talking about just now, maybe you also watch our video sustainability. So what's mean by sustainability? You have to practice ESG. ESG stands for environmental, social, and governance. So this kind of a practice, and also the reporting. The listed company now also required by Bursa. You have also disclose and report how does the company practice ESG, and how is the measurement. Like for example, one of the ESG is environmental friendly. How do you reduce the carbon, this kind of consumption? So you have to report in your this audit report. So this is one of the requirements. So that's why you can see others like climate risk management analysis. This one is required by those banks. They have to do this reporting. And tax corporate governance means that those maybe bigger corporate, he want to implement this tax corporate governance in the company, means that they set up something like internal control system, how to ensure the company can comply the income tax better, to reduce the risk that there are certain mistakes, to reduce the risk that non-compliant by your staff. So all this is talking about governance. Transfer pricing now is deductible up to 50,000 limit. And e-invoicing, I think later I will share more. Our income tax going to start the implementation next year to implement the e-invoicing. I think those businesses, you spend expenses to implement this e-invoicing is also deductible per year is 50,000, or any other reporting requirement related to ESG. Now, talking about ESG, I think many people will ask, what is ESG? In fact, ESG is this United Nations already come up the 17 goal to transform our world. Talking about one of the initiative will be take care of our environmental. So just now we are talking about sustainability. What it means by sustainability, it means that you cannot just concern about yourself today. You consume you jeopardize the environmental condition at the expense of your future generation. So it means that we have to consider and take care of our future generation also, take care about our environmental. So you can see there are 17 goals that are under the ESG initiative. No poverty, you can see those labor well-being. You also remember last time during the COVID time, the cloth industry, US got a problem. They say that your product they cannot accept because you have a forced labor. Means that you force those foreign labor work for long hour, pay them a low pay. So that's why this is talking about equality for the staff well-being. So this is also one of the initiatives under ESG. Now you may ask what ESG will impact you, because now ESG is talking about you need to comply, you need to come up with a measurement to report in your reporting. If let's say next time you want to export your product to those US country or Europe country, they also assess about do you comply with ESG or not. If you do not comply, then they may not buy your product. And not only you also have to, in order for you to comply ESG, you also have to assess your supplier, whether your supplier also comply with ESG. Just like something like halal also. If your product halal, you also make sure your product source, your supplier also comply with halal. So that's why only you can fully consider comply with this ESG requirement. So this one will be in the future That's why all the not only the big corporate, I believe those small SME also have to take note, because it's a supply chain, but SME will supply to the bigger corporation. Bigger corporation export to the US or Europe country. All these are linked together. So that's why ESG is getting more and more important. That's why you can see government just launched our ESG framework, I think beginning of October. So you can go to the MITI website to download all this kind of material to have some understanding. So I think now there are certain software coming out to help you to measure the carbon emission. So talking about how much release of the carbon. Now we want to start to reduce the carbon, this kind of consumption. So that's why this is one of the goal that our government going towards that. Okay. So I think this one is very important. And then other than that, talking about environmental also, now under this section 34(6) subsection H, if you spend those expenses to participate this kind of environmental project, like for example tree planting project, environmental preservation and conservation awareness project, and approved by this Forest Research Institute Malaysia, and also you have to apply for the MOF approval, then you can get the full tax deduction for all these kind of expenses without any limit. As long as it's approved by these two authority, whatever expenses, it will be deductible for tax. Means that, let's say tree planting project, you may have a take initiative to spend money to how to say plant some tree within certain area. So this is the project that you spend the money, all are deductible for tax purpose as long as approved by these two authority. Okay. Then another one talking about, I think government also launched this new industry master plan. I think in the master plan is talking about certain initiative. I think one of the focus will be our E&E, electronic and electrical industry. You can see those are IR 4.0, all this kind of initiative. So all this kind of related to this industry, and you can apply to MIDA and you can get those incentive, like for example, qualifying capital expenditure, you can claim 100%, then the tier 2 will be 60%. This one is talking about additional deduction. It's not the normal. Normal one, you can claim CA, no problem. On top of the normal, government give you, let's say, another 100%, means that you can deduct 2 times that, double lah. So if 60% means that it's 100 plus 60% means 160,000, no? So whatever you spend, let's say 1 million, you can get 1.6 million deduction, extra 60% deduction. Okay. Then those income can be exempted, can be 100% or 70%. Depends on what project you participate. And also now government go for outcome-based approach, means that they need to assess your result only. Your incentive will be given stage by stage. Instead of last time they given you 5 years, then some people may not put in effort to continue or make it happen. That's why government now is talking about outcome-based approach for tax incentive. Okay, so this one started only start for next year 2024. You can send in the application to MIDA. After that, I think you can see also the voluntary carbon market. This one I still don't have any idea how does it work, but it's talking about how you trade the carbon exchange. Those expenses that you incurred, you can get deduction up to 300,000. This one is a further deduction. Further deduction means an additional deduction. Okay, normal is for tax, not a problem for deduct. On top of that, another time of deduction. It can be something, you can make it simple to understand, it's a double deduction, up to 300,000 maximum. Okay, then another one for corporate. I think for those familiar with the company tax, you know that every year before your financial year begin, 1 month before, 30 days before, you have to submit the CP2 for the tax estimate for the coming financial year. What will be the tax amount? You have to estimate, then you have to start to pay by monthly installment. I think come to 6 months and 9 months, you are given a chance to do the revision for your tax estimate. If your estimate is too low, you may be subject to the underestimate penalty. So that's why now government or tax authority give you another chance to do your revision will be in the number 11 month. Okay, I think now we only given for two chance, number 6 month and number 9 month of your financial year. Now another one time that you can do your tax revision is number 11 month. But this one only for YA 2024 started. Only start from 2024 to start, you have another 11 months CB204A can be submitted for revision. Okay. And then another one, I think this one is also very important. I think getting more and more important is for your Form E, not only your Form E. As a company, your employer obligation, every year you have to submit your Form E, your payroll information. In fact, other than that, there are certain forms also you have to submit. It's just that in the past, many people may not aware, and also IRB are not very strict in this enforcement. But now IRB getting more and more strict on this kind of enforcement. I think not only for me now, when you have a new employee coming to your company, your HR have to submit the CP22. You can see CP22 is a notification of new employee to the IRB to notify IRB that you have a new employee coming in to submit the particular to them. The timeline will be 30 days before your new employee join your company. Okay. Other than that, for those employees who resign from your company, you also have to notify income tax submitting the CP204, CP22A. You can see the CP22A is for the tax clearance form for the cessation of employment of the private sector. CP22B is for those government sector. You can ignore for those private company, but you have to take note is a CP22, CP22A. Then CP21 CP21 is for those expatriate foreigners. If you hire foreigners to be your employee, same thing. When your employee coming in to Malaysia to work, 30 days before he come in, you have to notify IRB to register a tax file. If let's say this employee resign and he want to leave Malaysia permanently, you also have to notify IRB before he leave, 30 days before he leave. You have to send this notification. Whatever money that you're going to pay to this employee, you have to withhold until the IRB issue the clearance letter. Only you can release the money. If not, if the employee got any tax owing to income tax are not settled, you as an employer you are responsible for that kind of liability based on whatever money you hold, you withhold with you for that employee. So that's why this is CP21. So that's why all this you can submit online, because income tax said all this now going to start from next year. All this form can be submitted electronically. Means that you can submit online through the income tax border start from January 2024. Okay. So this one is very important. If you do not submit, when the Form E audit, or we call it employer audit, if you do not submit, means that you are not compliant. So not compliant means that it may subject to compound or penalty imposed by the income tax. Okay. So other than that, I think now we come to this incentive. I think incentive also, we have a lot of incentive provided. Some of them are extension, like for example, angel investor. Those who are angel investor, you invest in those startup company and approved by SC or authority, then whatever you invest supposedly is considered capital. But under this incentive, as an angel investor, you can deduct as a deduction whatever capital you invest the amount. Let's say you invest 1 million, it can be deductible provided it's approved by the authority for those startup company, etc. Another incentive is our EV also. So now in the budget speech and the appendix, they mention render only, but I just wonder how come they never mention about the cost. If you remember, I think about 1 or 2 years ago, EV cost you can deduct up to 300,000. Normal passenger car you only can deduct up to 150,000. Sorry, 100,000 if your passenger car the cost is not more than 150,000. And if your passenger car the cost more than 150,000, then only you can deduct up to 50,000 only. But for EV, it's special. EV can go up to 300,000. If you buy EV car, you can deduct up to 300,000 as a capital allowance based on the CA rate. And if you rent the car, also same thing. The accumulated rental also can be deductible until 300,000 amount, accumulated figure for if you rent the EV car. So now supposedly it's going to expire by I think 2025. But now government only mentioned the rental for EV car to be extended for another 2 years until 2027, but never mentioned about if those who buy the EV car any extension or not. But no matter how, currently your EV still entitled for 300,000 capital allowance up to 300,000 based on the CA rate until 2025. So we wait for certain maybe further clarification for income tax for those let's say I don't want to rent, I want to buy. So whether this in 2026 and 2027, it will be still entitled for 300,000 deduction or not. Okay. So another one will be the automation. I think automation still continue for those. I think now automation open for all the industry. If you want to spend invest in the automation, I think now if let's say you are the manufacturing, no matter what product you are manufacturing, now maybe you are too rely on foreign worker because of this government try to encourage people go for automation. If you want to spend invest to have more automation machine instead of rely on the foreign worker. Now you can apply to MIDA, maximum come up to 10 million. You can get extra another 100% CA claim. 100% means that double, means that let's say you buy an automation machine, you spend 2 million, let's say 2 million. Normal CA, that 2 million you can fully claim up to let's say 3 to 5 years time. Okay. On top of that, under this scheme, you can claim another 100%, means that another 2 million for your tax deduction. So means that you spend 2 million, you can claim deduction up to 4 million. So that's why this is a very good initiative and also very good incentive. I think many of our clients have claimed before. And the 10 million is the accumulated figure. It's not per year. It means that last year, let's say you already apply and approved 2 million already. So this year you have another 3 million to go. Want to apply again. So you still entitled because 2 and 3 is 5 months. Then next year, if you have, let's say another, let's say 8 million, next year 8 million. So 8 million, because the accumulate is 10 million, you already finished 5 million. You only entitled for another 5 million under this incentive. How about those balance 3 million? The balance 3 million, you still can claim the normal CA, just that you don't have a automation allowance and other 100% only. So that's why this is the idea of this incentive. So on top of automation, if you participate in the IR 4.0, you also entitled under this scheme to claim the this 100% SCA rate for this under this automation scheme. I think now initially now it's only for manufacturing. After that, government open to cover agriculture sector also. Now government also open up further to cover those commodity industry. So this is also cover wider for the industry purpose. Then for the crowdfunding, those individual investor, you invest in the company through this EC what we call equity crowdfunding platform, verified by this SC, and then you are approved. Then whatever you invest, you can claim as a tax deduction based on the investment amount. If supposedly the investment is a capital, supposedly it's not tax deductible, but under this scheme, you are deductible the capital amount that you invest as this approved individual investor through this equity crowdfunding platform. Okay, so this one also extended, already given, but it's extended another 3 years. So another one is you can see a lot of green technology, a lot of tax incentive given for ESG, green technology, this kind of direction. So same thing, our green technology incentive already given for some years already. Now government extend and also cover wider scope. So talking about incentive under this green, this this category is talking about those company who are doing the business. You are the one to using this kind of technology to provide energy to the user. You are the one doing the business. Then you can apply under this incentive. You can see that if you are doing the green hydrogen this kind of industry, if you are the one doing the integrate waste management business, okay, EV charging station, you help people, you build the charging station. You are something like petrol station. Now you are charging station. You are the one to build charging station. So all this you can apply for incentive. You can see the incentive can go up to 100% or 70% of the income tax exemption. Depends on your maybe your project. You have to apply to MIDA. Okay, and you can see the years will be at least 5 years, and then can go up to 10 years for the green hydrogen. So then talking about for those, let's say if you are not in that industry, then how about if you are just a normal manufacturer, but I install solar panel in my factory. This is the category that relevant to you, lor. For those manufacturer, if you install solar or whatever green technology or whatever energy saving system in your factory or in your business building, you can apply under this incentive, but you have to get certified by this Malaysia Green Technology and Climate Change Corporation. You have to apply within these 3 years. If you, let's say solar will be under the tier 2. You can see the solar will be under tier 2. So tier 2 means that if let's say my solar is 1 million, 1 million normal CA, you can fully claim. On top of that, government give you another 60%, means that 1 million, another 600,000 deductible against your 70% income. Depends how much income you have. Let's say, just now I mentioned 600,000. If 600,000, if your income is let's say 10 million, for example, 10 million, but you only have 600,000, whichever is lower. So the 600,000 will be fully deductible. If you not enough income, let's say your income not 10 million, your income let's say only 500,000. 500,000, 70% is only 350,000. 350,000, but you have a 600,000 this solar so-called ITA, investment tax allowance. So whichever is lower means that you only can claim maximum 300,000 for deduction. Whatever balance, the 250,000 can still carry forward to next year to claim if your income or the amount of the so-called allowance, whichever is lower. So this is the concept. So this is the so-called now government encourage people towards the ESG. This is also one of the initiative for ESG, because why? You lower down the consumption of it can be electricity generated by petrol. All this kind of is not a green technology. That's why the government hopefully people are using more green technology like electric car, solar system, etc. Okay, so all these kind of initiative are given by the government. Other than that, this one is talking about global service hub. Global service hub, last time we called it a principal hub. Now they changed the name to global service hub. Means that they encourage those multinational company for those company you have a regional office in other country. They encourage those company come to Malaysia to set up their regional management office, something like that. The concept. You set up the finance team here, you set up the business development team here, procurement team here, so help to serve the regional office, something like we call it regional head office. Then you can apply this incentive. It can be 5% tax rate or 10% tax rate. It depends on how many employment opportunity you can create in Malaysia, how many high pay employment opportunity that you generate in Malaysia. Then only government will consider how to give you the incentive. Either can be 5% or 10%. If you generate if your project is not much impact, maybe the incentive given are not attractive, maybe it's 10%. If your project is high impact, then he will give you a more attractive, can be lower up to 5% tax rate for let's say 5 years plus another 5 years. So it's a 5 plus 5. You can see it can be go up to 10 years. Okay. So the service can be like just how I mentioned, like strategy planning and management, like maybe share services. Share services. You set up a share service center here. You do the account for the other regional office. Is a share service concept. Okay. So I think another one is relevant to women. Those women, let's say because of get married, and because they have a children, maybe they stop working. They now is the time for them to consider come back to work. If you come back to work, government will give you some incentive. If let's say you already have a career break, you already stop working for at least 2 years, then if you now consider want to come back to work, you can apply to the talent corp, okay, to get approval. If the talent court approve, then you entitled for at least maximum 12 months. Your employment income can be fully tax exempt. Means that you don't need to pay tax for 12 months period for your employment income for those women who stop working for at least 2 years and now you want to come back to work. Okay, then this is a woman return program. And also another one is a expert or talent returning program. So this one is talking about for those Malaysian who are talent, maybe now working in overseas. Now government also encourage them to come back to work in Malaysia. If you under this program you come back, then your employment income can be taxed at only 15%, 1/5 for 5 years. You know our personal tax rate is based on table, if your income is higher, then the tax rate will be higher. If your income around 100,000 plus, you already hit about 20% tax rate. So that's why those experts come back, maybe they are very high pay, I would say. So that's why in order to attract to come back, so government give them 5 years, your tax is only 15%. And also you're entitled to buy a car cheaper without any excise duty, can be up to 100,000 exemption for your car. Okay, so this is the so-called the talent program. So other than that, now we come to this indirect tax. Indirect tax, I think not much. Talking about import duty, sales tax exemption for manufacturing acts means that for what is mean by manufacturing acts, is talking about for those not material, like for example your machine, maybe you need some lubricant oil, engine oil for your machine to run. This is the manufacturing act, is not consider your material, but it help you in your production process. In the past, all this kind of manufacturing act is not entitled for any exemption, but now government will provide you the exemption application for this kind of manufacturing act also. Another one I think many people also concerned about is our service tax rate will increase from 6% to 8% from March next year, 1st of March next year. I think now not all the service tax increase to 8%. Those restaurant, you can see restaurant, those telecommunication, your handphone bill will still remain 6%. Other services will be go up to 8%. And also now they expand the scope of taxable service to include logistics service, means that those transport company now is subject to SST. They have to charge 8% in the next year, start from March, 1st of March. And also those brokerage services, karaoke, or all this kind of entertainment place will be subject to 8% service tax next year. Okay, so now we come to this. I think government also mentioned last year budget talking about luxury good tax. It's just that after announcement, not much news, and then now in this budget speech also mentioned again. So they're going to implement based on the budget speech. They have mentioned that effective from 1st of May 2024, there will be a high value goods tax. You will be a new tax legislation to be passed in the parliament. The rate will be either between 5 to 10%, the range. Okay, for those luxury goods will be subject to this new tax. So other than that, for those entertainment industry, so you can see, I think currently for those singer or whoever come to Malaysia to have a concert, they have to pay 25% entertainment tax. but now government going to reduce, provided your entertainment is in the federal territory. Means that it's not the whole Malaysia. Federal territory will be like KL, lor. I think Labuan, those who are under federal territory region. So then your entertainment tax is lower. For the local artists can be fully exempted, it's a 0%. Okay, because other state they don't welcome other people come to do a concert. Okay, that's why maybe government only given for federal territory. So then come to this capital gain tax. I think it's many people concerned about this tax, how this tax affect them. I think in the last week IRB seminar, they have clarified certain information. I think he said IRB already disclosed the information. Who are the taxable person? So the taxable person is only company, LLP, limited liability partnership, trust body, etc. only. That does not include individual. It means that for if let's say you are the individual, you hold share in a Sdn Bhd, okay, and you want to sell next year, you want to sell, you are not subject to this capital gain tax. It's only those company, corporate shareholder. If your company hold share in another Sdn Bhd and you sell share, then you are subject to this capital gain tax. Okay. Now I think in Malaysia, this capital gain, before this capital gain tax, we have a real property gain tax. So real property gain tax is also applicable for those company if your company is considered real property company. What it means by real property company? If let's say you are the company, your company let's say is dormant, do not do any business, but the company got one property. Okay, only one property. So this, because the property value consists more than 75% of the total tangible asset, so this company will become a RBC company. So what it means, what is the implication as a RBC company? If the company is RBC, if the shareholder hold share in this RBC share and he want to sell, then the share is subject to RBGT. This is now and before already happened, already have the law. So provided if the share in the RBC you sell is subject to RBGT. So if let's say this capital gain tax come in under enforcement, so IRB already clarified there will be no double tax. There will be no double tax. It's either if you are the company and you sell share in the unlisted company, you only subject to capital gain tax, no more subject to RBGT tax anymore. If you are the company corporate shareholder, okay. If you are the individual shareholder, as a person, I hold share in Sdn Bhd. When I sell share, it's not subject to this capital gain tax because individual is not taxable person under capital gain tax. But you still have to check whether your share is RBC share or not. If your share is still a RBC share, as an individual, you still have to report under RBGT. If let's say your share is not RBC share, then as an individual, is no tax, still the same. So it's not taxable. So I repeat again, the capital gain tax is only company, trust body, LLP, those separate legal entity only be taxable under this capital gain tax. Okay, then you can see capital gain tax rate will be 10%. So if let's say you are the corporate shareholder, let's say you are the holding company, you are the holding company, you already own the company before 1st of March 2024. So let's say in the future you want to sell. When you sell the time, now based on the appendix, they say that your tax can be based on the net profit 10% or based on the 2% of the gross sales value. Is optional based on how you choose. If you already own the share before 1st of March 2024. If you only buy the share after the 1st of March 2024, and in the future you sell, then you have to pay the tax based on 10% based on the net gain, the net profit. So what you can deduct from your this capital gain tax, I think same thing now, you can deduct your acquisition cost, your share cost. When you buy the share, the time what is the cost, You can deduct your legal fee if you have incur some legal fee to do the S&P agreement. You also can deduct, let's say, stamp duty. You also can deduct let's say you have somebody refer you a buyer, you pay them a commission, so the commission also be deductible before you calculate this tax. Means that after deduct all the expenses, only the net profit, so-called the net gain of the disposal share, is subject to 10%. And then also when you need to submit the so-called capital gain tax, if you are the holding company, if you are the corporate shareholder, after you sell within 60 days, you have to submit the capital gain tax and pay the tax. So this is a capital gain tax. 60 days is a submission due date. And other than that, you also have to know that how to determine the selling price. Okay, the selling price, how to determine based on IRB clarification. If you have a S&P agreement, your selling price will be whatever mentioned in your S&P will be the selling price of. If you do not have S&P agreement, it's based on the settlement amount, how much the buyer pay you to acquire the share, then it will be your selling price. So this is how the mechanism work lah. So you can see for those IPO and restructuring can be exempted from this capital gain tax also. Means that if let's say I'm a holding company, I got a subsidiary, let's say next time successfully listed on Bursa, then whatever share I sell to the new investor, I will be exempted from the capital gain tax if I'm a holding company lah. Okay, if I'm an individual shareholder, I'm not subject to this capital gain tax. But you have to check whether your share is RBC share or not. If your share is not RBC share, then is no any tax will be payable for the share disposal by the individual. Okay, so this one is start from next year, 1st of March 2024. Okay, then I move on, come to others. Okay, now talking about RBGT, if you next time sell a property, I think currently we are still under official assessment. Official assessment means that after you sell a property, you have to fill up the form, submit within 60 days to the income tax department. And then income tax department will have an officer to check your calculation, etc. If any further document they need, they will contact you to ask for that. If no problem, then the officer checking, finish the check, then they will send you a Form K, official assessment. But under self-assessment system, just like our income tax on next time for RBGT, from 1st of January 2025, not so soon, another 1 year to go. So same thing as like income tax. Next time you sell property, as the seller, you have to calculate your tax by yourself. You can engage tax agent to do it lah. You can engage a lawyer to help you to do. You have to calculate, fill in the form and submit. Whatever you submit, the income tax will treat is correct. Then the form, the tax declaration is considered a deemed assessment for you. You don't need to wait for IRB send you Form K anymore. It's no more Form K in, let's say, start from 2025. So just like income tax, last time income tax, after you submit, I think more than 20 over years ago, after you submit, you still wait for Form J, then only consider assessment. After 2000, income tax implement the self-assessment system, whatever Form C you submit is considered deemed assessment. So now 2025, RBGT will be the same. Whatever RBGT you submitted will be considered the deemed assessment for you. It's no more Form K to be issued. And within 6 months, if you found out that there are certain mistakes in your calculation, you still can write in to amend your RBGT calculation. So this is what the IRB clarified during the online seminar last week. This is the RBGT. Another one will be this is the e-invoicing. Now, I think in the last year budget 2023, when government announced the time, the timeline given by the IRB is longer one. They will target by 2027, all the business have to be compulsory to implement e-invoicing. But now, based on the income tax seminar, you can see the timeline pushed earlier by 1st of July 2025. all the business, no matter you are big or small, you are compulsory to implement the e-invoice. Means that you still have another 18 months to go for all other small business. I think now next year, August, 1st of August, 2024, the IRB will start to do the implementation with those big corporate with a turnover more than 100 million. Then after that, 1st of January, they will do it for those business, the turnover between 25 million to 100 million will be the year after next, 2025. But come to July 2025, all the business below 25 million is compulsory to implement the e-invoicing. Now you may ask, what is e-invoicing? I think some of you already have read some article or whatever. So I think e-invoicing supposedly during the GST time, the custom is the one want to implement, but so happened that our GST was abolished. So now it's a income tax department going to implement. Means that your invoicing next time when you every day you issue your invoice, so all your data you will be straight away transferred to the income tax border. Okay, income tax every day will collect your invoicing data in the real time. Then IRB will have a record. Then you also can check whether your buyer, your customer can check whether your invoice have the record in the income tax or not. There will be given something like QR code for your customer to check. So if the invoice have a record in the income tax border, then your customer only can claim for tax deduction purpose. Okay, if the invoice data is no record in the IRB border, you cannot claim tax deduction for your customer. So means that next time all the business have to issue e-invoicing. There are certain category. If you don't want to share the data with IRB, you can implement it every month to console the data, only submit. But the problem is if you're using the second method, your customer cannot use your invoice to claim tax deduction purpose. So means that I believe most of us, our client is the business. I think it's a business entity. They may want to claim for tax deduction. So I think you have to participate this implementation of this e-invoicing. So this one is to something like to reduce those black market economy, because now many people still have a choice not to issue invoice, and then or some people even like after year end, the account show that the profit maybe a bit high, they still want to do some adjustment, get some invoice from others. This is what IRB is trying to do it to avoid all this kind of so-called tax planning practice. So that's why they implement this e-invoicing. So just now you can see IRB or the government given the 50,000 expenses deduction is for you to invest to implement this e-invoicing. I think for those who are using software to issue invoice, I think it's a time to talk to your software vendor. I believe they already start to work with IRB, how the system have the linkage, etc. Then to make sure you are prepared to implement this. And also you also have to know that what are the mandatory information you need to fill in for you when you issue the invoice at time. I think now when you issue invoice, very simple, you just need the name, address, etc. But I saw the guideline issued by the IRB. There are certain field are compulsory. There may be a new field or new particular you may need to ask from your customer, like income tax number. You need to get your customer income tax number to put into the invoice, and all this must be shared with the IRB to the IRB border next time under the e-invoicing system. I think there are certain compulsory field that you have to find out to get the info from your customer. So that's why you want to prepare early, and you need to know what are the extra information that you need to request from your customer before implementing this e-invoicing. That's why it's very important. How to determine your turnover, whether it's 100 million or below 100 million, based on IRB seminar, they say based on your account of 2022. So either your audited account, or if you are not Sdn Bhd, maybe you are sole proprietor partnership, based on your form P or form B that you submitted, how much your turnover, that one will determine whether you are below 100 million or above 100 million, or you are below 25 million or above 25 million. So it's based on your 2022 account that you submitted to the income tax. Okay, so this one is I think IRB already issued the guideline for this e-invoicing. You can download from the HASIL website. As I said, I think most of the work you need to do is you have to communicate with your software vendor. So whether their system will going to work with IRB, how to implement this, you need to understand this. And also you need to understand how to prepare. Like just as I said, what are the extra information that you need to request from your customer in order to fill in for e-invoicing purpose for the, I think, another 18 months to go. Okay. So I think move on. I think stamp duty talking about transfer of property for those renunciation this kind of property transfer. This renunciation means that if let's say a person a parent, let's say a parent pass away, he got the 3 children, okay, 3 children, he got a one property, he give to 3 children is one third share. If let's say one of the children say that I don't want the property, then his share, the one third of his share, will be equally shared to other 2 siblings. No? So this is what he means. So I think in the past, the stamp duty is still based on 1 to 4% that kind of scale to calculate. But now they only fix it at 10 ringgit only. This is so-called the renunciation of right. Something like you give up your right to receive the so-called the property from your passed away parents. You give to your other sibling equally. So this is what it means. Okay. Then another one is for those foreigners buying property in Malaysia. I think Malaysia, the property stamp duty rate is from 1% to 4%. 1% is for the first 100,000, second 400,000, 2%, third 500,000, 3%. Above 1 million is 4%. But for those foreigners start from next year, they buy property, they have to pay the stamp duty at fixed rate 4%. No more based on the skill rate 1 to 4%. No? I think they are learning from Singapore as well. As I know, Singapore foreigners buying property, they have to pay a very high stamp duty, different from the Singapore citizen. Okay. So another one, I think the last one is talking about exile duty. I think for those who do not touch about this Switzerland beverage, I think it's not much affected. So means that those this is the so-called Switzerland beverage will have this kind of exile duty, 50 cents per liter. And then for those chewing tobacco, they also have this exile duty, 5% plus 25 ringgit per kg, something like that, based on the tariff code. So this one is effective from 1st of January 2024. Okay, so I think for my sharing, I think that's all. But I will let you have more time to maybe ask some question to clarify. See any question that any participant have asked.
Yep. Thank you, Mr. Lam, for the insightful sharing session. We have a few questions here from our audience, so let's get started on Q&A. So let's do how to register our clinics to enables for dental claims.
I think if you are the approved dentist under this what dentist council, something like that, like our doctor also have the one association. As long as you are the registered dentist with those council, you are considered approved person. You don't need to separately register. Those are a doctor who practice, they must be registered with the this medical association. Same nature. Okay.
Right. So going to the next question, childcare allowance subject to EPF contribution.
I think this one, if you ask me, based on my understanding, all the fixed allowance is subject to EPF contribution. So you can double check with the EPF, but I already have a lot of feedback. Fixed allowance is subject to EPF contribution, but you still can double check with the EPF authority. Yeah. And the withholding tax on software, non-foreign.
Yeah, can the withholding tax portion of software purchased from foreigner company be claimed under the category of company equipment in the context of CA?
Okay, withholding tax, you have to see whether the withholding tax is borne by you. Let's say, for example, let's say withholding tax is only talking about the right to use. If let's say you in your software you need to get a right from the software, the right fee, the fee that you pay for the right, let's say let's say 10,000. 10,000, you need to deduct 10% from the 10,000. You only pay the so-called that supplier 9,000. The 1,000 you have to remit to income tax as a withholding tax. So under these circumstances, because the withholding tax is not borne by you, it's a supplier tax. You are the so-called person liable to deduct and pay the income tax only. Then the 10,000 so-called fee, you can capitalize in the software cost to claim CA. If let's say your supplier say, I don't want to pay the 10%, you have to pay me the 10,000 fully. You cannot deduct 1,000 from me. If let's say in this circumstance, you pay the supplier 10,000 and you are the one fork out another 1,000 to pay the withholding tax, that 1,000 that fork out by you is not so-called deductible and also not entitled for CA also. So this is not deductible item and also not claimable item under the CA. So that's why you have to see your withholding tax is borne by you or is a supplier he willing to bear. If the supplier willing to bear, then it can be part of the software cost to claim CA. Okay.
Right. So moving on, fee to golf coach and membership got tax relief.
Golf coach membership got tax relief. You are talking about the personal tax relief. So I think no, because in the guideline for the membership, they only mention about gym membership. Even last time, some people ask, I hire a yoga teacher, pay him to teach me yoga. Also not deductible. It's not claimable under the personal relief. He mentioned very clear, you join the membership of the gym. Inside the gym got yoga, that one is deductible because it's included in the membership fee of the gym. If you are separately hired someone trainer to train you in yoga or golf, that one is not claimable under this lifestyle personal relief. Okay.
Right. CP22A can be excluded if employer able to prove the resigned staff is employed by new company. May I know how to prove that?
Based on IRB that day, the seminar, so far they never say got any exception. So if you ask me, I would say based on now what I understand, you still have to submit. Okay, unless in the future after some maybe forum have with those business association or whatever, maybe IRB will further issue some guideline under what circumstances can be exempted lah. But under now, what I understand is no exemption. So whatever employee resign, you still have to submit through online lah. Yeah.
All right.
Capital gain tax.
Yeah, questions regarding capital gain tax. When the Sdn Bhd sells its shares to employee at a discounted rate, when it's subject to capital gain tax, if IRB calculate according to market value.
Okay, I think the capital gain tax, income tax also mentioned, you have to comply with the so-called the transfer pricing. I mean the arm's length principle. But if the employee is not the major shareholder of the company, is not controlling the company, so it's just a typical employee, is under the e-source. So I believe whatever value you sell to them is still considered a fair value, because you want to, I understand under e-source that you want to sell a certain value to entitle for your employee to get some gain in the future when they sell those share in the future. So this is the purpose of the e-source. But if the employee is considered not a related party, whatever value you're willing to sell to him and he willing to buy from you, then it's considered arm's length already. So it is Of course, company side still have to pay capital gain tax, but you also have to remember employee side also have the tax implication for employee under e-source because it's also taxable on employee for the e-source portion. So you, the employee, also have to pay tax whatever he gained from the e-source. Okay.
Right. For individual shares trading, is it affected by capital gain?
For individual share, as I said, listed one is totally not affected. Unlisted for individual, if you are the individual, you are the shareholder, you buy and sell Sdn Bhd share, it's also not taxable. But you have to check just like I mentioned, you have to check those company whether it's RBC company. If those company is not RBC, then the share is totally no tax implication. But you don't be so active. So far, I never come across IRB will treat your share trading as an income tax. If you are too active buy and sell, say buy and sell share, it can become a trader. When you become a trader, your gain can be under income tax. Okay, so just like property lah. I think sometimes I also heard sometimes those taxpayer caught by IRB saying that you are too active buying and sell property. Whatever gain is no more under RBGT, is under income tax. So this one you have to take note. If you are not active, then you are individual, you sell Sdn Bhd share, it's not taxable under the capital gain tax, provided the company is not RBC company. Okay.
Right. Regarding e-invoice, if purchased from China in number invoice, so cannot deduct tax.
I think from the overseas invoice, I don't think there will be governed under e-invoicing lah. It's only those local one. Okay, only the local one. So from the overseas one, still not applicable for e-invoicing mechanism. Okay.
Is the e-invoice expense allowed subject to both trade and non-trade expenses?
Is the e-invoicing expenses allowed subject to both trade and non-trade expenses? I think you are trying to asking about e-invoicing expenses. You are talking about if you have expenses, whether I want to claim for tax deduction or not, is also need to issue under e-invoicing. If you ask me as a business, I think if I implement e-invoicing, I will issue all will be under e-invoicing. I cannot choose because just like I mentioned two methods. If you choose first method, you have to give all your so-called your customer under e-invoicing. You cannot choose or this one don't want to claim income tax, I don't need to issue e-invoicing. No such thing. When you implemented e-invoicing under the category 1, then you have to issue all to your customer. You cannot choose. Okay.
Where and how to install the e-invoicing system for small business entity?
If you are using software now, if you are using a software issue invoicing now, I believe those software company already starting working with IRB for their system, how to have that kind of linkage. You have to talk back to your software vendor. If you are now still using manual issue invoice, then you can look for those maybe popular or common accounting software. Then you can use them, start to use them to issue invoice and do your account. Yeah. Okay.
I am a tenant who would like to install solar to reduce my electric bills. One, do I also entitled to apply grant from NIDA? The solar system is better under my company name or belongs to the landlord? Which one more tax saving?
I think talking about the just now, the incentive I mentioned, the ITA, income tax allowance, it must be for business purpose. If your property is for renter, if the renter is not considered business, because only business can claim capital allowance. The ITA is a special capital allowance given for deduction purpose. If you are the renter, you are under a 4C income, you are not entitled to claim any capital allowance. If you are not entitled to claim any capital allowance, means that even those you apply to MIDA to get just now the ITA, is not helpful to you because it's no extra deduction. You have to use it in your business. Okay. Then talking about the grant means that whether you can apply money, something like the monetary grant from MIDA or not. I don't think MIDA will give for those non-business purpose. MIDA is encouraged for business purpose. It's an industry business development agent. So that's why this one I don't think you are entitled, but you can try to ask. But based on my understanding, I don't think they will give for those non-business purpose. If you ask whether who is saving, I would say those who doing business is the one to claim, is the one who apply to MIDA to get the ITA, not the non-business. Must be the business purpose. Okay.
Right, if a company already applied incentive for solar and approved by MIDA and Chitra since year 2022, but tax agent does not allow company to claim such incentive due to government yet to gazette their incentive, whether really need to wait to gazette only can claim. Company missed out the incentive for year 2022.
Okay, I think I know what is your question. If there's a letter issue from MIDA, I know if the law is not gazetted, strictly speaking, legally you cannot claim because the law is not gazetted. But you still can claim after the law is gazetted. Your tax agent have to help you to write in to amend the income tax calculation to claim back the incentive. Yeah. So it's still allowable once the law is gazetted. Yeah.
Is the collective investment scheme or unit trust fund subjected to capital gain tax?
I don't think the unit trust fund they invest in the Sdn Bhd, they will invest in the listed company. So I don't think if let's say like if they invest in Sdn Bhd, yes, they are still taxable under capital gain tax. But I don't think they will invest in Sdn Bhd. They will usually invest in those listed company. Yeah.
Is invoicing applied to retail such as restaurants?
Yes, all the business, no matter big or small.
Want to confirm the part-time who work only 1 month need to submit CP 22 too?
Even a part-timer, you have to see you engage them as a subcontractor or freelancer service provider or as an employee. Even 1 month, if let's say this person is considered your employee, you still have to submit this CP22. How to determine he is your employee? Do you control this person? Control means that under the so-called engagement, this employee, even 1 month or so, this 1 month, he have to report to work every morning, 9 o'clock until 5 o'clock, entitled, let's say every week, 2 days as a rest day. This one is considered an employee because you are the one control them. He is the servant to you. Okay. If those are freelancer is just a service provider, it's a part-timer accountant. So it means that I engage them, he just help me to do account only. Whether he come to my office or not, I don't care. I just need to get the account done. This is a freelancer service provider. Then it's not considered an employee. Then you don't need to submit this CP22. So you have to see the engagement nature. Yeah.
Manufacturing aid SST or imported duty exemptions, which department to apply for the exemption?
It's a custom. You to apply for this exemption under custom. Indirect tax is under custom. Yeah.
Right, the shareholder of company A is an individual taxpayer if he sells his shares in company A to company B without profit or disposal. Is there any tax impact to the individual company A and company B?
Shareholder of company A is an individual taxpayer if he sells share in company A to company B. Company B is a buyer without profit. Is there any tax implication to individual? So if company A is not IPC share, then the individual is no tax. The capital gain tax is also not applicable to that individual. Okay, so the seller is the one to subject to tax, but individual is not taxable person under capital gain tax. Okay.
Can we please discuss on self-bill?
I think self-bill is something like last time GST also have this concept. It means that I remember in the oil palm industry, those middlemen to help you to collect the oil palm and resell, and the price is the one that I determine, and the seller is not the one to determine the price. Okay, Then if the price not determined by them, and also they are just a very small, something like the so-called the business, they may not have an invoice to issue. Under these circumstances, I'm the one is a buyer. I'm the one also issue the invoice to myself. This is the concept of self-bill. So under the GST time, I have this kind of knowledge. So this is a self-bill, means that buyer is the one to issue the bill to himself because the price is determined by the buyer, not the seller. So this one is considered talking about self-bill concept. Okay.
With e-invoice implementation, hard copy of invoice is no longer required to keep for 7 years, right?
Hard copy no longer because you issue soft copy. At least you need to keep the soft copy at least 7 years. Still applicable at 7 years, but it's in a soft copy. Okay.
How should one determine the acquisition cost when calculating capital gain tax?
Acquisition cost, as I said, your purchase price of how much you pay for the share during the time you acquire the share at the time. If you don't have a agreement, then you have to prove by payment of how much you pay to the previous buyer when you subscribe the share. That one will be your cost. Plus, if you engage lawyer to do SPA agreement for you for this acquisition, you also can add in the cost. And also those stamp duty you pay for the share acquisition also can add in for deduction. So these are the few expenses you can add in as a cost for deduction purpose for capital gain tax, like stamp duty, legal fee, commission. Commission means that someone refer you buyer, then you are able to sell the share, then you pay commission. But commission, that one you have to also take note. So how to prove that person help you to get a buyer? You need to have an engagement, maybe letter, not like property. I think they will give you a license, a property agent, they will give you a proper invoice. If you are just a friend, then I think you have to take note is on proving how to prove the commission. Okay.
Right. For the benefit in kind, company give 40% discount for staff purchase if item worth 8,000 ringgit, which means 3,200 ringgit staff get benefited. The company need to declare this in employee EA form. Will this 3,200 taxable in personal income tax?
For discounted price for goods, I think there is a certain amount is exempted. If not mistaken, I think it's, I don't know, I think it's 1,000. I don't know 1,000 or 2,000. You check the public ruling, I forgot the figure, but there's a certain amount for discounted price for your product given to the sell to your employee. It's not fully taxable, not it's taxable, but there's an exemption amount, either 1,000 or 2,000. So let's say you are 3,002. If let's say it's a 1,000 is exempted, means that you only be taxable is on 2,200. Only 2,200 will be put into the EA form. And the 1,000 exempted amount, you have to put somewhere in the EA form as a tax exempt, something like tax exempt benefit, okay, or allowance.
Please list all the conditions that need self-bill.
All the condition, so far I don't have the list of condition, but as I said, one of the condition is the price is fixed by the buyer. This is one of the condition. Others one, I think you have to wait for, I think you can refer to the e-invoicing guideline. I mean, I think there will be some list of condition there. Okay.
For non-registered SST company, how the e-invoice submission works? Can we compile and submit the invoice as what you mentioned earlier?
E-invoicing not necessarily must be SSC registered company. As I said, I already mentioned all the business you have to implement. If you're using the method like you are not every day or in the real time to share the data, is every month you consult and submit to IRB, then your customer get your bill, they cannot get tax deduction. So that's why this will be the so-called problem for your customer. Okay. My invoice, etc. Border versus API. I think this one is technology wise. You have to check is the software they're using API to link to the IRB border. Just like our office, we have an Australia office, we're using API to link back the server here. It's an IT technology term, so you have to find out with the IT guy. Okay.
Is unlisted shares include the foreign companies?
Is the unlisted share including the unlisted share in the IRB slide? They say those companies incorporated in Malaysia, but you also have to take note. Now our foreign source income is taxable in Malaysia. It's only we have a 5 years exemption, provided you have to prove you have to pay tax in overseas before. Then the income you remit back now is still exempted, provided you fulfill the condition. So you are talking about those listed share in the foreign country, and you sell, you remit back the money to Malaysia, whether still subject to Malaysia tax or not. Last time I would say we see whether it's capital in nature or income nature. If capital in nature, then it's not taxable under income tax. But now because of this new capital gain tax rules coming in under income tax, then it make me also confused whether this will be taxable under foreign source income or not in the future. So this one, for the time being, I'm not able to answer you, but definitely there will be some tax implication because the foreign source income remit back to Malaysia. Because now it's still exemption for 5 years, provided you have to prove you pay tax in overseas before. That one will be the one of the condition. So I will say that this one we wait for further clarification for income tax. Okay, because this one is no longer considered, even it's capital in nature, but because of the capital gain tax, it can be taxable also. How the IRB see this in the future? Okay, yeah.
Yeah, so there is this CP22 and CP22A apply to all local staff.
Yeah, correct. I think now IRB want to apply it to all the staff, no longer just the foreigners.
With the same form, must it be submitted 30 days before they join or leave, if not after they join?
No, it's before they join, before they leave also. Yeah.
Is CP21 applicable to all foreign workers?
CP21 is a foreign worker leave. CP21, I think it's for those foreign workers who going to leave. So for those foreign workers who has a tax file with IRB and paying tax in Malaysia, and now he want to leave the country permanently, then you have to submit that CP21. Yeah.
Could you please explain about the SST 8%? We are engineering consulting firm. We claim our fee by progress of the project. The question is, if we want to claim after 1st of March 2024, can we just claim the 8% even though our quotation before is based on SST 6%?
I think this one, when you provide quotation at the time, do you have a clause in your quotation mention your GST, if let's say you mention in your quotation is 6%, or you never have a clause saying that in the future, if any changes in the GST rate, we have the right to adjust the GST, not GST, SST rate, then you still can charge your customer 8%. If your quotation never mention this, then now you have to talk to your customer because of these changes. So next year from March onwards, you have to charge them the 8%. If your customer acceptable, understandable, I think it's no issue. It's a both party agreement. Yeah.
SME, if the shareholders 100% owned by foreigner, the chargeable income will charge at 24% or 17%.
If foreigners own 20% share or more in one of the company, 20% or more, then that company is no longer SME, it's 24%. Last year budget mentioned about already amended the law. Okay, foreigners investor hold 20% or more, then it's considered non-SME already for that company.
Q&A, if my supplier will not register for the e-invoice system, so can I enter it in my system in the future?
If my supplier without register for e-invoice system, so can I enter in my system event? If your supplier, let's say he's not in the e-invoice system, and he give you the invoice is not so-called having a record in IRB border, then you are the one having a problem to claim the tax deduction issue. It's not the supplier side. It's your side for the tax issue. You cannot claim tax deduction because you are the one pay your supplier, and you are the one want to claim as a tax deduction in your income tax purpose side. Okay. So whether your supplier, you want to enter them into your system, I think that one is depends on your supplier give you the full detail or not, their name, address, income tax number, etc. So you still can enter them particular in your system, provided they have all the particular law. Even though they are not participate in the e-invoicing, but you still can enter their particular in the system. But as I said, in the future, no matter how big and small, all the business have to implement e-invoicing. But I know some people still ask, how about those roadside punya burger shop, all this burger store, all these without those very far away, the line, the internet line, way how to implement this. This one is IRB issue lah. So you have to see how. Okay.
A company, senior berhad foreigner director can buy trading companies. Any tax for individual?
A company, senior foreign director can buy the trading company. And tax for. If you are the foreigners, you are the director of a company, and you want to invest in other company, I don't think there's any tax implication. You still can invest. Yeah. Is selling product at cost. If you sell your product at your product selling price or normal so-called selling price without any big discount, then it's no BIK because they don't have a benefit to your staff. Your staff still have to pay as your other customer pay the same amount. Yeah.
That's the last questions that we had. Right. So ladies and gentlemen, we have reached the end of what has been an incredibly informative and engaging webinar. I hope you found the insights and expert guidance invaluable in your journey to make the best use of the upcoming year. A special thank you to our speaker, Mr. Lam, and to all of you for your participation. So before we go, we just wanted to let you know that Cheng & Co Group is currently offering a free 30 minutes consultation for businesses looking to optimize their tax planning strategy. If you are interested, simply just fill out the contact form on our website or reach out to us directly via email at inquiry@chengco.com.my. So if you want to stay up to date on the latest news and insight from Cheng & Co Group, we encourage you to follow Cheng & Co Group's social media channels and subscribe to our email newsletter. So check out the links to our social media and email newsletter in the chat box. We will share regular updates and tips on a variety of topics relevant to the business owners and financial professionals. So once again, on behalf of Cheng & Co and the entire team behind this event, thank you for joining us today. We look forward to seeing you again in our future events and wish you all the best as you implement the strategies and insight we shared today. Have a wonderful day and here's to your success in the year ahead. Goodbye and take care.